Hello, everyone, and welcome back to our latest episode of Real Take Real Estate with the Joseph team. I'm your host, Maddie Maloney, joined by my co-hosts,
Joe Sambear
and Sam Feda.
So today we are diving into the hot topic of affordable housing programs because we know, as you have probably seen in the media headlines, affordability is the biggest issue right now with home ownership. And the main things affecting this is going to be mortgage rates and home prices right now, and then also income and wage gaps or just income in general right now. So we wanted to go over some of our affordable housing programs and how some of the investors that we have, some of the down payment assistance programs that we have, we are using to help combat, some affordability issues, and how we're helping our first-time home buyers and repeat buyers get into these affordable housing programs. So wanted to start off with some of the government programs that we have that we offer. So Sam, can you go into a couple of the programs?
Sure, yeah. So the first one that we'll talk about is MISHDA, which is the Michigan State Housing Development Authority. And what they do is they have a program out there, a couple different programs that are geared towards first-time buyers, where they have options for down payment assistance to help bridge that gap. If a buyer doesn't have funds for a down payment, they require as little as 1% down into the transaction, which can go towards closing costs. So you don't need to have much to get into those programs, and oftentimes they have reduced rates on them to make them more affordable for buyers than your standard mortgage rate you may be seeing. So the first one they have is a down payment assistance program in the state of Michigan, which can be used for up to $10,000 towards your total closing costs and down payment. And they do have some restrictions. Their purchase price limit is $224,500, so you can't be over that limit to utilize any of their products. But they do offer this, and it's not a grant. So a lot of people come in and say, are there any options for first-time buyers where there's down payment assistance, thinking that it's money that's just given to them? Mm-hmm. It does come with stipulations. So it is a second mortgage that is put on your house behind the first mortgage. So it's a 0% mortgage. There's no payment due on it, but it basically allows you to utilize that money towards your down payment and closing costs to get into the home. So it would have to be paid back if they do either sell the home. It would come out of their total net proceeds, or if they refinance down the line, it would have to be repaid at that time. So that's a couple different things to think about when utilizing that program. And another option that MISHDA has, which is helping out a lot with affordable options for buyers right now, is you don't have to use that down payment assistance, and then the rate is reduced even further. Mm-hmm. So it's typically between like 0.5% to 1% cheaper than any current going 30-year rate right now. So you can utilize this if there's 3% or 5% or even 10 or more percent down. It's another affordable option with a lower rate to get into homes there. And then there's no second mortgage. You're not using any down payment assistance, and there's a bigger gap to get you the lowest rate to make it as affordable as possible for you. So
and that spread can change given the market rates can change and their rates can change, and sometimes it's a lot less expensive and sometimes it's closer to what the current market rate is, depending on the timing. Mm-hmm. And you'd mentioned the max purchase price, and a lot of the things we talk about today are usually going to be county and area specific, where it's the HUD median income we talk about, or like the max sales price. And some of these things are like you have to look county by county, area by area to see what specifically qualifies for your area that you're in. Exactly. So that's the first thing we look at is where is the property that you're looking to purchase, because that's going to maybe dictate what the max sales price is, what the income limits are. So that's kind of the first thing we look at with all these programs we're talking about today.
And that's something that we like to bring up too. It's not like when you ask us what down payment options there are, what affordable programs, it's not just and one answer fits all for everyone. You know, every state, every county, every, you know, property that you're looking at is going to be different, and there's going to be different programs specific to that area. And sometimes there's even programs based on your employment. You know, your employer might have some down payment assistance. And so when we're looking at affordable housing programs and when we're talking about it today, we're not going to go over every single one because there's going to be hundreds across the country, you know, county specific. We're going to go into some of the ones that we know that we have utilized a lot that are going to be specific in the Michigan area. But just know that, you know, if you're in a different state or you're in a different county, there might be other programs as well. And so if you contact us, we are going to be more than happy to do that research to look at what's going to be attainable and what is going to be available for you based on your income and based on where you would like to be. So just keep that in mind. But MSHDA, if you're in the Michigan area, you're a first-time home buyer, this is really a great program to look at. Just lots of benefits with the down payment assistance, being able to utilize that $10,000, you know, kind of like free money. You know, it's interest-free. When you go to repay it, there's not any interest or any other fees on top of it. It's just whatever you borrowed is what you're going to have to owe back. So really just a great government program.
Yeah. And with those products in Michigan in particular, a lot of times with the down payment assistance products is you still have the basic conventional loan, FHA loan, RD loan, VA loan. So usually when we talk about MSHDA or down payment assistance, it's usually something coming on top of an additional layer, but it's going to fit most of the other program guidelines typically.
Exactly.
So it's always think we're getting a traditional, conventional, or government loan. This is just like another added layer, which we're more than happy to assist with. And if we find other products out there that we're always looking to engage and get signed up to help.
Absolutely. And that too, that you don't have to be a first-time home buyer. What it's defined as is really, have you owned a home in the last 3 years? So if you haven't owned a home in the last 3 years, but you owned one 5 years ago, you can still qualify for these programs. And with MSHDA too, they have the different areas that we mentioned. Some areas they call targeted areas, where if you have owned a home in the past 3 years, they'll still allow you to utilize this product because they're trying to, you know, fill those areas and enhance the
area. And that is like you said, that's a really good, that's like probably one of the biggest misconceptions is what is in the mortgage industry, what is defined as a first-time home buyer? It's
and
3
it's
years.
3 years. So
it's not ever.
Yeah, exactly.
But that's a good point, Joe, is that you can layer it. So you can do a MSHDA on top of a rural development loan. And I actually just had a customer who, you know, she has fantastic credit, you know, great ratios, good job, but, you know, just didn't have enough funds saved up currently. So what we were able to do was the property that she was looking at was in a rural development area. So we were able to get an RD loan, but so that's 100% financing there. But then also we were able to add on top MSHDA, and we're not using the entire $10,000, but helping to just cover some of those closing costs and some of the down payment so that she can get into this home, because she is the perfect client for this and just needed a little bit of help just to be able to get into it. But, you know, just a really great product. And it's really good to know that you can look at combining some of these. And that's one thing that you should really bring up to your lender.
And we need a lot, I would say with these products, we need a lot of advanced planning would be in your best interest.
Definitely.
Because sometimes it does take time to put it together, look at it. There's a lot of considerations. There's a lot of research that can be done. We might have to make phone calls on your behalf. So obviously we would do it right away for a house you're looking at. But if this is probably one where more time to get pre-approved and start earlier would be better.
Yeah, because it doesn't just go to our underwriting department. There's a whole other layer with MSHDA where we need to make sure they line up.
And a lot of the ones we're talking about today, whether you're doing a more enhanced DPA, down payment assistance program, or just like one of the more conventional Fannie or Freddie products, a lot of them will have first-time homebuyer classes needed. And it would be great to get that started earlier in the process, because it can actually be, a lot of those classes are very beneficial and they can help you through the process and feel more comfortable about what you're doing. And so it'd be great to do that early in the process instead of when your loan's actually in process.
Exactly.
And kind of wait at the last minute to do that. So
yeah, most of them do require those first-time homebuyer classes, which are beneficial, like you said, because you can get it all out front, know exactly how to plan instead of seen a house you like online, wanted to jump on it, it's best to get in front of it. So
yeah. So great overview of Mishta. Any other area specific options? You know, we do, if you look in the Lansing area, we do have some other ones with, you know, Capital Area Housing Partnership. There's some City of Lansing grants as well. So there's just a lot of options, and definitely get with your lender when you're looking at area specific and just see, you know, what they have or what options you may not be thinking of.
And there's a lot of resources. They do a lot of classes, a lot of local area. So I would say the first thing to start with is your local area housing coalition. Most areas have a housing coalition, or like Capital Area Housing Partnership does a fantastic job. And they also will help with like a lot of educational resources that not even just first-time homebuyer classes, but more enhanced personal finance classes and things like that. So
one thing that I actually found out about our housing partnership is that sometimes these partnerships also have tool rental. You know, when you're a first-time homebuyer, you probably don't have all these tools, especially if you're going to be demoing or doing some extensive yard work. You know, I would check in because they have some really great resources and even some classes about, you know, how to put up drywall, how to fix a leak or something. So just another thing, just a little tidbit in there as we're going over these programs is definitely check in with your local housing authorities to see what they have, because there's just so many resources out there to help you make your home ownership successful and just an easy, better process. All right, so we've kind of gone over some government programs, you know, making sure you look at some area-specific options as well. Now, we also have some federal agency grant programs. So, Joe or Sam, whoever wants to jump in, can you guys talk about a little bit about these programs?
Well, I'll start with just the topic of affordable housing. I think it's important to know that Fannie Mae and Freddie Mac have made affordable housing and home ownership one of their number one priorities. So that's why it's really important right now for us to keep up on what's happening, because there's dynamic changes happening and it's going to continue to happen. So we have to constantly be on the lookout for what the new products are and grants. But we have two in particular right now that are going on that people would be surprised to hear probably, that Freddie Mac released a Borrower Smart program, which is these are actual grants, not something you have to repay, but they have a good product out right now that's they call it Borrower Smart, which you would be eligible, first-time homebuyer will be eligible up to $500 of grant depending on their income. It's very easy to utilize, and we would help you with that.
So it is going to be income based. So there's a couple different tiers. So there's $500. I think there's also a very low income one too. So Sam, do you have you know, the specifications? And of course, if you come to us, we are definitely going to look up to see exactly what you can get.
Yeah. So those are constantly changing. They've changed this, the amounts you can get since they created this program within the last couple of years. So you can get up to $1,500. But the income limits, like you mentioned, Maddie, are going to prohibit how much you can get. So at the least amount, if you qualify for their affordable housing programs, then you can get a minimum of $500, but you can get up to $1,500. So there's $1,500, $1,000, and then $500, depending on your income.
And one thing that we should also mention is that when we're looking at income limits, you know, it's not just going to be a set standard number, like, oh, very low income is $30,000 and under. We look at what's called AMI, the area and median income. So we look at income averages for that specific area, because income in one area of Michigan is going to be, you know, most likely very different from a different area in Michigan. So it's not just going to be a set number. So when we are looking at your income and those limitations, we're going to be looking at where you're going to be purchasing this property to see what you're going to qualify for. So that was the Freddie Borrower Smart, which is a great program. And then Fannie Mae also has a great program as well that was recently released. And so, you know, these programs are constantly changing. But with this Fannie Mae one, Joe or Sam, do you want to go into the specifications?
Yeah, well, this one is up to $2,500, and it kind of the same concept of it's income based. It is for first time and repeat homeowners that are in the lower income lower threshold of 50%, equal to 50% of or less of the household median income in the area.
Yeah, and that one's pretty cut and dry there. There's just the one that you are in the what they call very low income limit there. And both options will require you do that first-time home buyer counseling. There's a little bit more in-depth where you have to get on the phone with a representative directly from Freddie or Fannie to do over-the-phone counseling, which would take up to an hour, where it's very in-depth and making sure that you're aware of all the ins and outs of becoming a first-time buyer.
Mm-hmm. But really, there is going to be a little bit of work that goes into it. But it's not just work for nothing. These classes are very useful. I remember when I was going through and buying my first home, I had to go through a first-time homebuyer class as well, which seemed kind of funny to me at the time, because here I am, a mortgage banker, going through a first-time homebuyer class when I'm helping first-time homebuyers. But it was really great because they went into also budgeting and making sure, you're accounting for not only your property taxes, insurance, principal and interest, but also making sure, you have enough for utilities, any other expenses, and just kind of doing a whole encompass of what it means to be a homeowner and making sure you're really prepared for what you're getting into. It is an amazing experience. It is a great opportunity to be a homeowner, but there is a lot going into it. So these homeownership classes are really great. So yes, it is a little bit of work going through and getting some of these grant programs or government programs, but I promise you it is worth it. It is beneficial. And it's really just another tool to help you attain some affordable housing. So that is some of the federal agency grant programs. And again, these change all the time. So make sure to check with your lender on, the most up-to-date available programs. But then there's also some reduced cost first-time homebuyer programs as well. So we've kind of gone over some of the down payment assistance and some grants, but there's also some loan programs that the investors offer as well. So Joe, can you go into these a little bit?
Yeah, and I think just to start with this is these are the most commonly utilized affordable products that is very mainstream throughout the country, sometimes very underutilized by our other lenders, because you do have to pay attention to what you're doing instead of just quickly putting a customer into a certain product or saying that this is the product. By doing a little research and a little work, there are some really good agency conventional programs that, and most of these, the big benefit is the down payment. So the ones we're talking about with Fannie Mae, Home Ready, Freddie Mac, Home Possible, those are for lower income borrowers, but it allows for lower down payment, lower mortgage insurance, better interest rates. And this is where we see a lot of the opportunity. And it can really affect the actual payment because now the interest rate's lower and the mortgage insurance is lower. So it's a great opportunity. I would also say this topic is probably the biggest mortgage misconception in purchasing a home, because some people think, I have to have 20% or I can't qualify, or I have to have 5% or I have to have 10%. Most people are not. I would say it's very common that most people are not aware that you can get into a house in a lot of situations with 3% down for a conventional loan.
Definitely. And that's one thing. I was kind of doing a little bit of research on typical down payment. So NAR, National Association of Realtors, actually came out with a study that, typical down payment for first-time home buyers was around 6%. So that just shows that, there's a lot of first-time home buyers that are able to utilize those 3% down or just lower down payment options. And it goes over that misconception that you don't have to have 20%. So if you feel like, I'm getting into this home, but I can only provide 3%, so I'm not sure if it's really made for me. No, you are with the majority of other first-time home buyers. You're not alone with only offering 3%. And usually it is going to be the best program, even if you have other funds available, because you want to be able to keep that emergency fund. You want to be able to have savings left over that you can use to furnish your house, use it for any repairs needed. So it really is important to know that these lower down payment programs are available and that you can utilize them, and that you're not just the only one utilizing them. Most of first-time home buyers in America are using these programs.
Yeah, and as much as we, of course, I mean, if you have the capacity to put 20%, ideally that would be wonderful. Mm-hmm. But like Maddie said, you can get into a position if you, as homes appreciate, it's going to be hard. You can find yourself trying to catch up with the market. Mm-hmm. It can be very challenging. Mm-hmm. And the way the rents are going up, it's very hard to keep on that pace to get to the 20%. Mm-hmm. This is a really nice way to get into the housing market. And when we talk about affordability, it's a way to make it work. So you can control your principal and interest. Your payment's going to stay the same over the next 30 years on these products because they're 30-year fixed products. Obviously, taxes, insurance, mortgage insurance might change a little bit, but the actual payment will stay the same for 30 years. So it's a really good opportunity. The other ones we have are, Fannie Mae has a standard 3% down, and Freddie Mac has what they call the Home One. Now, these products might surprise people a little bit because there's no income limitations. Mm-hmm. So that's kind of surprising to people when they might be a higher earner and they're looking for a lower down payment. There's some options for that as well.
Yeah, and those restrictions on those ones, you do have to be a first-time home buyer, so not owning a home within the last 3 years, but there is a 3% down option without income restrictions is what those are.
And so I just want to make sure. So those other two programs, so it's the Home Possible and the Home Possible is with Freddie, so that's 3% down that you can use with the first-time home buyer or repeat buyer. There's just income qualifications there, but a lot more attainable. It's 80% of the AMI, area median income. And then with Fannie, it's Fannie Home Ready. Mm-hmm. And so same thing, 3% down program, 80% AMI. So just really great program. And so it just, make sure when you're going through as a first-time home buyer or as a lower income buyer, you're asking the question, making sure that your lender is going through all the options available and that they're not just pushing you into, conventional 20% down, but that they're looking at all the resources and making sure that you are utilizing everything that you can and that is available to you.
Yeah, don't be afraid to ask the questions because if you start with an online application and all of a sudden you have an approval and all of a sudden you find yourself buying a house, you really need to have that. That's why that conversation of goals and objectives at the beginning with a mortgage banker that's seasoned and experienced, those are the kind of questions you should be asking right the first conversation, even before you apply.
Definitely. And with affordability as being one of the main issues in real estate and the housing market, these programs are going to be constantly changing. There might even be a new program by the time that this podcast comes out. But, our job is to stay on top of this and to make sure that we know what is available and are utilizing everything to make sure that, we are setting you up for success and that, we can use everything available. So any questions, or any last comments on affordability or for anyone that's having struggles or anything that you guys want to add?
I would just say that to get started is always the key is, not to worry about taking that first step to get approved. And then what we really like to do is give you some scenarios. So you can see before you even start shopping, you can see is this really going to be affordable for me or is it not? Is this, a good fit? Is this something we can accomplish?
Exactly. Yeah. If you're stuck paying rent and you've had the thought, might want to buy a house in the near future, it doesn't hurt. There's no fees or application fees to get started. Just make the call and see what's available, see what's out there, and we'd love to help out.
A lot of times people are worried about their credit. Maybe if they're not don't have a lot of credit history or have had some challenges. We welcome anyone to apply. Absolutely. And we'll sit down with anyone and work through their challenges and give them some guidance on what the next step is.
Definitely. So today we were able to go over affordable housing programs. We reviewed government programs, some of the federal agency grant programs, and then also some reduced cost first-time homebuyer programs. So we are here for you, all of our first-time homebuyers that are looking to get into the housing market, and we are here to help you combat that affordability issue. So thank you so much for joining our episode today on Real Take Real Estate with the Joseph team. If you liked today's episode, please comment, share, subscribe. We would love to hear your thoughts and opinions, and we will catch you next time. Thank you so much.